Corn and wheat futures found a way to hold on to slight gains, but the soy complex was an anchor on the entire market. Cotton got caught up in the sell-off. Sellers gained momentum in the lean hog market, while live and feeder cattle futures saw mid-morning gains turn into sharp losses.
Live, turn via Farm Journal Studios. This is AgriTalk. This afternoon, we begin with a conversation with Bill Conradt from Tredas LLC. Directly following the news, Brian Splitt from agmarket.net. I'm handsome newsman Davis Michelson. Now, say hello to the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much, and welcome to AgriTalk, everyone. Glad that you're with us on a Tuesday afternoon. Davis, I had hoped to feel better this afternoon than I did yesterday afternoon, and I'm not too sure that I can say that. Corn fractionally higher, wheat slightly higher, another big down day in the soy complex, soybeans in particular. Bean oil in particular. But dang, man. The corn tried to recover, was trading, 4 or 5 cents higher at mid-morning, gave that up to close mostly steady. It felt like another give-up day in the grain markets. Did not feel good to me at all.
Yeah. Well, and here's the thing. I mean, the framers, I think if we go back to original intent, the intent was not happiness. It was the pursuit of happiness. We're free to pursue happiness.
That's right. That's the guarantee.
We are not promised capture there. There's no capture promised.
I get it. I understand that.
So don't blame America. Yeah, don't blame America.
Did I say that I was blaming America?
I just don't want this to turn sideways and get out of control.
I am not blaming America. I don't know. We'll let Brian Splitt straighten all this out for us here.
We'll figure it out
in just a little bit. I think he's got a comment for us on what happened in this feeder cattle market today. Talk about a market that gave it up. Today was a day that the feeder cattle market gave it up. So we'll get the latest from Brian on that. And then we got Phil Conradt, Tredas LLC. Yeah, looking forward to the conversation with Phil. All right, let's get started with the news.
Well, Chip, December soft red winter wheat futures are caught in a sideways trading range around the $6 level. The contract opened slightly lower and near session lows and then recovered to spike resistance at $6. December SRW futures posted an inside trading day, suggesting more consolidation and sideways trade. Winter wheat harvest is estimated at 63% complete. That's well ahead of the 52% 5-year average, suggesting the bulk of harvest hedge pressure has been absorbed by winter wheat contracts. Spring wheat futures rated 75% good to excellent as of July 7. That's up 3 points from the previous week. December HRW wheat futures were a half penny higher at 5.96 1/4. December SRW wheat up a whole penny, 5.95 1/2. September spring wheat closed at 6.17 1/2, unchanged on the day, Chip.
Yeah, I like the point that you're making there about the winter wheat contracts have absorbed the bulk of the hedge pressure. But I think that those markets are probably going to be watching what's going on in Ukraine and Russia and Kazakhstan much more closely than hedge pressure coming out of the U.S. That seems to be where the focus is.
Chip, USDA rated 68% of the U.S. corn crop in good to excellent condition. That's up 1 point from the previous week. Corn rated poor to very poor was unchanged from the previous week at 9%. Rainfall in previously dry areas of the eastern Corn Belt capped buying and erased mid-morning gains in the corn market. December corn opened slightly higher, posted an inside trading day, and closed just under the opening range to reverse early upside momentum. Corn also felt spillover pressure from back-to-back sharp losses in soybean futures. September corn futures 3/4 cent higher, 3.94. December corn up 3/4 penny, 4.08 1/2. March corn futures closed at 4.23 1/4, up 3/4 cent. Is that a hat trick of 3/4 higher?
It is. It is. That is the hat trick. And, I understand that's on the plus side of unchanged, but to me, it feels like corn failed today and had a lower close is how it feels.
Yep. Well, November bean futures opened slightly lower, firmed to trade slightly above resistance at $11. then dropped to post a second day of sharp losses and to close near session lows. November beans are trading at a 3-year low. August bean meal spiked double bottom support at 344.10 and recovered to close just above that level. August bean oil plunged more than 200 points to pull soybean prices lower. USDA says 68% of the bean crop is in good to excellent condition, up 1 point from the previous week. Rain in the eastern belt is expected to improve bean yield prospects. August soybeans 17 3/4 lower, 11.31 1/4. September beans down 19 1/4 to 10.77 1/2. November beans closed at 10.80, down 19 1/2 cents, Chip.
Yeah, bean oil last week was a big supportive factor. Bean oil this week is a big downer for the soy complex.
Well, December cotton today was 50 points lower at 70.55. On your livestocks, August fat cattle turned mid-morning gains into sharp losses after USDA reported a $4.87 drop in heavyweight choice graded boxed beef prices. Movement was good at 71 loads, but not good enough. August fat cattle today, $2 lower, 182.35. August feeder futures down $3.45 to 255.72 1/2. And on your snout side, soft cash market fundamentals weighed on lean hog futures today. August hogs were $1.12 1/2 lower at 88.40. The October contract, $1.75 lower, 70.77 1/2. Over to you, Chip.
Thank you very much, Davis. Brian Splitt, agmarket.net. How you doing, Brian?
Awesome, Chip. How are you?
Well, better than these markets feel, that's for sure. And this feeder cattle, they just seem to have lost all the upside momentum. What's it look like to you?
Yeah, so the feeders have been my concern about the health of the overall cattle market. And then we saw this in late March where the fat cattle were making new highs. They looked like they were trying to break out, and the feeder market just wasn't having it. And then eventually the feeders rolled over and pulled the whole complex lower. So when you look at August feeder cattle, these highs that we just made late last week were right at the downtrend, and that's from the highs that were made September of last year to the highs that were made back in March. So while the live cattle, and you think about June, June went off the board at 193.50, and here we are with August, $11 below that. So something has changed, and I just wonder if you saw a blow off high in the cash cattle market, if we saw maybe a little bit of a blow off in box beef. And what I can tell you is August live cattle stopped right where it needed to today. The June low on the continuous cattle chart was 180.92. And so we took that out by about 10 points and bounced. But if you start getting August live cattle on the other side of 180, I think it's going to change the way the chart looks. This market's been in an uptrend for 4 years. And so if we violate that 4-year uptrend and see the other side of 180, I think you've got a trade that the fund manager has been right on for 4 years. They've done very well, but it's going to get stale, and I think they're going to exit.
Yeah. When positions start celebrating anniversaries, they might not have a whole lot of life left in them. Am I overreacting to how negative the corn felt today?
No, not at all. When you think about that low that we had on the report last week at 412, we were able to kind of tick back up and trade through it a little bit. And then we closed back under that. So we just couldn't get anything going above the old low. Beans did the same thing this morning. That report low was 10.97. We made it up to 99, and then we broke 20 cents over the course of the day. I think this stuff's going a lot lower, and I don't think people realize what the risk is still.
Oh, holy smokes. All right.
Sorry,
Brian.
Sorry.
Yeah, no, buddy, you got to give it to us the way you see it, and it sounds like you just did. Thanks, man.
Yep, thank you. Catch you later.
All right, Brian Splitt, agmarket.net. All right, coming up next, Phil Conradt, Tredas LLC, here on AgriTalk.
In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk.
This guitar solo has got to be in the top 7 of all-time awesome guitar solos. I'd put it in top 7. Yep.
Yeah. I would love to hear that list sometime.
Mm-hmm. Okay. Sure.
The top 10 list.
That's right. A lot of them are songs that I'm on, a lot of those, so you may not have heard of some of them. But there's some good guitar work in that top 10, yeah.
Oh.
Not the least
like
of which
that.
Angus Young, of course. Sure.
Absolutely.
Mm-hmm.
Absolutely. There's got to be a little Van Halen in there, too.
There's a lot of Van Halen in there. There
Little
wouldn't be a
Santana.
list without Van Halen,
Little Santana, little Prince. little
Prince for
Eric.
Sure. Yeah. Maybe. You know what? I would pull out Nuno Betancourt from Extreme. That guy is a super freak. Nuno Betancourt. He's Nuno Betancourt. He's Portuguese. You see, you got me all excited.
Wow.
Yeah.
See, I would love to hear it. Hey, you know what we should do? We should put together the Davis Michelson top 10 all-time guitar riffs and use them as bump music. Big Apple Joe, can you get on that?
Joe, let's get that going.
I want to hear it.
I wasn't listening. Can you repeat that?
No, we cannot.
No, we cannot.
Phil
We've got to get to Phil Conradt. Tredas LLC joins us. Phil, how are you, buddy? We got to lighten it up a little bit on a day like today. Everything good?
Yeah, we do have to lighten it up. And I was trying to not listen to the end of Brian Splitt talking there, too. That'd be ideal. We don't need that negative energy right now. We're trying to get excited about 2, 3, 4 cent up moves in corn. So
yeah. Negative energy is a great way of putting it. That's what it feels like in these grain markets right now, doesn't it?
I mean, it's the sell button is on, right? And we can't seem to find the bottom. Yesterday was obviously horrible, and today's action sure didn't make you feel any better about it. I guess the question becomes, right, where are we going to bounce from finally, and what kind of bounce could we see? And I guess I don't disagree with Brian that there is going to be more potential blood in the streets, but I guess my combat to that is, could you see a retracement of some sort before then? I'm not talking a dollar rally, but if you get 20 to 30 to 40 cents out of it, you're still at levels that you maybe don't necessarily love, but they're a heck of a lot better than where we sit today. And I mean, you go back, the March contract bottomed out at 394.5, and so maybe you get a chance here if the SEP could get a little bounce at some point. I just don't know the catalyst, right? And it's obvious in hindsight, but sitting here today, it's hard to find a reason to be bullish anyways.
We say this from time to time, and I don't want to minimize its legitimacy, but sometimes it's okay to be bullish just based on how the money is positioned in the market. And the funds are clearly on one side of the canoe here, Phil.
Oh, 100%. They're loaded up that way. My fear to combat that, Chip, is I think anyone you talk to, probably myself included, feels like there's got to be some bounce, some rally.
Right. Well, I feel the same way.
Yeah. And we got, the funds all on one side of the boat, and you got probably the general public and farmer on the other side of the boat of, we got to see a rally. So who gives first? There's a lot of corn left out in the farmer's hands that eventually funds will start buying some back. But if it's met with such hard farmer selling, which it appear it probably would be, you're going to cap a rally pretty hard and fast as well. Funds, where do they stop? I guess they're probably commentary and things I've read. Maybe you're thinking a 183 type yield, and we'll see what USDA kind of prints on Friday. But just a big crowd.
Don't you think they'll keep it at a 181?
I would sure think so. I mean, they've only decreased it once in the last 10 years, and that was last year. Yep. And so you won't see a decrease, but an increase would seem to be a little early. And I guess to combat that, if you saw an increase and it's too early to tell, could you see a slight revision in harvested acres?
Harvested acres.
I mean, I think the last time they've done that was 19, and we had way worse planting wetness or precipitation. But it wasn't maybe as extended throughout the growing season as now. We've really fought it, the last 2.5 or 2 months for sure.
Yeah, absolutely. What they're going to do with the supply side of the balance sheet on Friday's S&D, I think is going to tell us a lot about if this downside momentum is going to be maintained or not, isn't it?
Yeah. I mean, honestly, if we could just have a neutral report, in my mind, would feel like, okay, now we can bottom out. But if you get if they were to increase yield, and it doesn't take a big increase, a bushel and a half, or half a bushel, you start cranking, closer to 2.3, 2.4 billion. And that's just massively burdensome, but it would seem too early to do that. And it could be a deal where you get through the report, and even if it's slightly lower, not even yield, just overall carry out or neutral, you could see at least a bottom form here and get some sort of short-term pop until we understand August weather, because we still have enough weather to worry about. But at the end of the day, I mean, heat's definitely going to set in, it appears, just from everything I've read and seen. But moisture doesn't seem to be going away. And I think there's areas that would love to see the moisture go away, right? And so that's what sucks about wet markets or moist markets, whatever you want to word that, rain-driven markets, is it doesn't affect every acre, where drought will. And what sits in the back, I guess, of my mind, are things we've talked about in the office, is last year in a drought year, on paper, we raised 177 bushel. And now we're talking 181 with pretty good growing conditions. Could that number actually be higher? Now, I think the argument probably comes back to harvested acres, but that's such a longer term thing to come out that it's what's that do to price action in the short term?
Right, exactly. So what Phil is talking about here is, as the harvested acreage number comes down, the percentage comes down, you're taking the lowest yielding acres out of the equation. If you're taking low yielding acres out of the equation, that lifts the national average corn yield. Phil, the only reason that I'm saying this is because there's a lot of people out there that don't understand that. And if they do understand it, they don't want to admit to it, and they fight it.
Well, I mean, that's the general trend, right? I mean, you don't want to. We fight the government. You only get 40% to reply to the planting intentions and the planting actual planted acreage, which I don't blame them. But the numbers are what they are. I mean, you could probably debate the add in total what the Q3 stocks to be. Is that correct or not? Versus maybe what we've been feeding, what we've been exporting, et cetera. But again, that is what it is. And really, you go back over the last 10 years, we've only had 5 of those years we've dropped third quarter feed use, and only 3 of those years we've seen a slight increase. So I guess there's a chance of that, but it's pretty darn low, and you're not going to see it now. And that's the problem is how much more. Like I said, I think a flat report, a neutral report, I think trade, from what I understand, is looking at, maybe a closer to 2.3 billion bushel carryout. If you could be anywhere south of that or even at that, would feel at least like maybe they've priced that in. And so again, using history as a base, 14, everyone wants to reference 14. I don't disagree. Things look a lot the same. 18 was another year we really topped out in May, and we fell apart into about July 15th. And we got, the high that year was 420, and we came back to 380 August 1st before we went down to about 330 or so. So that's the kind of move, I think, if you're holding on to crop and you're looking at new crop, you're not trying to get back to the highs. You're trying to get back to somewhere middle in the range and say, I got to be content with this, even though I still dislike it, and understand that carry should be bigger.
Now, I understand that you are not predicting a move down to those old lows in the 320s, 318 range, something like that. But I think that there's some that think that just, quote unquote, can't happen again. Well, the reality is it can happen again. And that we have to understand that might be the downside risk in these markets, right?
100%. You hate to say it out loud, but I think that's a definite possibility if we realize a good crop or it's perceived to be one come August. Why wouldn't we try to push lower and find more demand? And really, that's short-term pain for hopefully a long-term gain if we can get more exports and maybe some things change supply-wise. But I mean, to say we won't go back to it, and inflation and all of that's raised our level, I don't necessarily believe that. Just the tune of we're in a supply and demand market, and we are supplying ourselves out of a price that makes sense. And over time, looking backwards, we will go below the cost of production for a short amount of time, and that's just where we're at.
Yep, absolutely. You just want that you don't want the short amount of time to turn into an extended period of time, and hopefully we're not going to see that happen. All right, we're talking with Phil Conradt, Tredas LLC. Nebraska had some hail damage. We have not talked about that yet. I want to hear what Phil is hearing from his customers. We'll do that next.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were a half-cent higher at 5.96 1/4. December SOW wheat up 1 penny to 5.95 1/2. September corn futures were 3/4 cent higher at 3.94. December corn also up 3/4 to 4.08 1/2. August soybean futures were 17 3/4 cents lower at 11.31 1/4. November beans closed at 10.80. That's down 19 1/2 cents. December cotton today was 50 points lower at 70.55. On your livestocks, August fat cattle today, $2 lower, 182.35. August feeders off $3.45 to 255.72 1/2. And August hogs today, 112 1/2 lower at 88.40. Get more market news every market day. Visit tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG.
Welcome back to AgriTalk. I'm Chip. Glad that you're with us. We are in the middle of a conversation with Phil Conradt, Tredas LLC. Phil, it's not that the market was too concerned about it yesterday for sure, today barely, but what's the chatter on the hailstorms out there in Nebraska?
Bad, right? I mean, there's a lot of wide swaths, especially you get kind of south of Kearney, Nebraska, and say south of York, and those are generalized areas. So central and kind of west central part of the state, you had a lot of really bad hail, and there's a lot of complete losses, a lot of 25 to 50%. That's why hail insurance is overly expensive in Nebraska, I guess. But no, I think in general, I have empathy, and my heart goes out to everyone that you have a complete loss. It's like, I don't care what kind of insurance you carry. It's like, okay, that's great, but you still had a very good looking crop, if not one of your best looking crops, and you were excited about the yield, and then you get smashed down like that.
Right.
And so it's a battle as far as what it does, say to markets. To me, that's more of a basis play. You're probably going to see some better basis opportunities in Nebraska. Kansas has added a lot of demand in that western Kansas with dairies, and we're seeing that being reflected now, just in central Nebraska basis. So I look for that, obviously, to continue with those losses. I mean, that's such a basis thing, but
it's 3 years in a row out that way, Phil. That's the thing. I mean, the dryland crop in the northern part of the state 2 years ago, southern part of the state last year, and now this hail taking hail don't care if it's irrigated or not. So it took some really good yielding corn out of the equation. It's 3 years in a row in Nebraska that they've had this basis adjusting event.
It seems like every year, and it's been worse, right? The last three, like you said, we've had just a lot of bad situations and affected different parts of the state. It's, I guess, good for the basis aspect and bad for the individuals that are fighting it. And that's the hard part. It's like they say, Chip, our state slogan is Nebraska. It's not for everyone. And that's no joke when it comes to farming too. So
Yep. I hear you. I hear you. And the bad thing is, I agree with you. If it's feelings for all the guys that got hit with the hail, it individually it is devastating, but it's a factor that the cash market deals with, not the futures market. And
I think that's hard at times for guys to wrap their head around, and just because they see it and they see their neighbors and they see miles and miles of this and think there's no way we can do this. But that's for the cash market to figure out. The futures market obviously is bigger scale, and looking at global stuff. I mean, be more concerned about Ukraine having a big drought that could potentially knock global stocks. And so it's things like that.
Great point.
I get the frustration. I just had this conversation with a guy that is drowned out kind of on the river there too. He had a bunch of acres, and it's like, it sucks. and there's nothing you can do about it. But the market itself does not care. In wet years like this, we have drowned acres in northwest Iowa too, right? Southern Minnesota.
Yeah.
But it's not wide. It's bad and it's widespread, but not probably bad enough to dictate futures price. So,
Gotcha. Okay, what about the demand side of the market? We've been talking a lot about the incentives on the ethanol side of things. It seems like the ethanol guys have got plenty of incentive out there to keep things going full force, don't they?
Yeah, I mean, I think you look back at last year. We've had a very strong run in ethanol, but the general feels the ethanol production can be stronger than last year going forward, just because we have such impressive margins lately. Mm-hmm. And so, could we use more there? I mean, that's really the question. You start looking around, different private estimates, and it would seem to me there's a lot of people in the camp of maybe we're using anywhere from 100 to 200 million more bushels between feed, ethanol, and exports. And so, it's 50 here, 50 there, 75 there. And doesn't seem like much, but if you can tweak, again, go back to that bigger picture carryout number to from a 2.3, 2.2 down to a closer to 2, we've realized that crop from a market standpoint would seem. And so that's where I think maybe you get the bounce. But to say you're going to see that, the hard part is, and I would go back to this, is the thought of seeing that Friday is probably not true.
Right.
If we can just get some stabilization out of it, that'd be the biggest thing. But no, ethanol has been running strong, and you don't see that changing in the short term at all.
Okay, so it seems like the right set of expectations ahead of Friday's report for corn is probably not a lot of change in the carryover, right? Are we still thinking about a 2024-25 carryover in the 2.2 billion bushel range?
Yeah, I think what I was seeing somewhere in the 2.2 to 2.3 would be kind of the number, just with the higher acre number, right?
Yep.
They could see USDA kind of going closer to that 2.3 type number from a 2.1 we're at now. Trade, I would assume, has thought about that. It really depends. They're not going to probably change anything demand-wise. There's no reason to for late June new crop commitments. And so after what they did in the quarterly stocks report, they're going to add 150 million to carryover, which is where you're getting a lot of that increase from the 2.1 to 2.3. So burdensome, yes. Are we realizing the highest number, and is that already baked in? And where can we find some short-term demand that maybe gets the market excited enough to get funds to start covering something? That's, I mean, to go back to that, Chip, whether it's the report or funds or whatever, you look back and there's been, of these lower trending years, we've always had the funds long at some point. And we haven't had that yet. And I'm not saying they have to go long, but even if they could get back, where they're only short 50,000 contracts, that's got to warrant somewhere in the 30 to 50 cent rally.
Yeah.
And so, I mean, when I talk to guys, it's like, I don't know where this is coming from. It's going to be what it's going to be. And the market's flushing out. And so could it go 20 cents lower? Sure. Technicals are just bad. And so you look at that, though, could you get a run back to the 440 on new crop to 460? There's a lot of moving averages up at 460, and that seems like a dream today. But realizing the expectations of what's out there is the biggest thing when I'm talking to guys right now.
Yep. You just made me flash back when you said 460, because there was a time where everybody was begging for a move back to 460. We got the move to 460, and then it turned into a 560. And it kind of ruined the you got to sell into strength. But is that your attitude in here, Phil? If we do get a rally, you've got to look for your selling opportunities?
100%. I mean, you get that rally, like I said, 440 to 460, and not that I love those levels, but I think you got to be a seller to protect yourself, because there's no reason for us on paper today to go back to 485 or 490 or 5 even. So take advantage of those and be realistic to the tune of where we're at. things can change, right? Sure, maybe China pulls a 2020 on us, but it would seem all their estimates are going the other way.
Right.
And you have political things that could be coming down the pipe in November that shake things up at that point too. So it's that part you can't manage. What you can manage is what's in front of you. And so what I'm telling guys and looking at is either we're going to get this rally, or at some point the market's going to push us to a point of strength technically, and we need to take advantage of that. You got to have triggers, and whether that's price, time frame, or technical moves. I mean, I don't care what the technicals are saying. If we got back to 460, I'm a seller, just due to where we're at. And I think too, if you're, it gets complex, right? And marketing can be, but at the end of the day, we should see somewhere we're at a 15, almost 15 cent carry to March right now, 14 and 3/4. If you follow a 5-year average of full carry values, it'd argue we'd be back kind of closer to 18 to 19 cents out to March. And so if you get a chance to go sell 440 to 460, you turn that into a, almost 470 type number. And that's, again, 2 months ago, nobody wanted to sell that. It's a frustrating number to sell. But today you'd give your left arm for it.
Yeah.
And that's the hard part, right? I mean, I think
Yep.
tempering expectations and also understanding the funds are in such a vulnerable position to anything that could happen. And you don't know in our current climate what that could be. And it could be outside of the markets that give us that, or outside the production side of things that give us that upward momentum again. And so, old crop, you got a deadline on, but yeah.
Yeah. Hey, real quick, we've only got about 40 seconds left here. Is your attitude the same towards soybeans?
Yes. Beans, at least their season is a little longer, and you get into August, you typically will have some opportunity. I'm completely in the camp of being what I like to call patient, and prayer will hopefully lead to a little bit of an upside. But it really comes down to your personal position and your risk tolerance too. So I laugh when I say that, but if a guy's nervous, you at least got to try to put a floor on things. But you hate to be a fire seller at lows.
I'm with you. Yep. We just need to find that catalyst, and I think what I heard you saying was we don't need the funds to get long corn. We'd just like to see them get out of their shorts and see what kind of an opportunity that would create for us. Phil, good stuff, buddy. Thank you so much for your time.
Hey, thank you, Chip. Have a great day.
You too, buddy. Phil Conradt, Tredas LLC. Davis and I will be right back.
On your favorite radio station or your preferred digital device, AgriTalk is live every weekday. And welcome back to AgriTalk, everybody. I am your pal, Davis Michelson, here with Chip Floyd. We're live, buddy. Live. Yeah. Like, when you're hearing these words and stuff, those are just coming out of my head right now.
Yes.
Planet Earth. Yes. Unless you're listening on a delay. And then, in which case, never mind.
Straight from KC to South Bend to...
Yep. Yes.
God, is it L.A.?
Yeah.
And then out to the world.
Probably. Yeah. Out to the known universe. And beyond. Beyond. We got the Beyond the Known Universe filter installed last week. I've started making a list. We didn't even mention SRV, Jimi Hendrix. Here's an interesting one. Okay, Megadeth is on there. I don't know if you were into the Rust in Peace album, but there's some... monster guitar work in there. The Cure would probably show up on my list. Just Like Heaven. I'm thinking of that.
Yeah, I'm with you.
That little guitar line right there, I don't know what it is. When I hear that line, I feel like I'm in The Cure, which I'm not necessarily comfortable with. But that's, it takes me someplace. That's what I look for in a guitar solo. Take me someplace. Don't just play at me, Take me somewhere.
I got you. I'm not hearing any Brad Paisley or Keith Urban on your list.
See, Paisley's got to be on there.
Okay.
I've also got Brian May trying to work his way in there. I'd love to find a way to sneak John Mayer into there. When I think about who are the modern lords of guitar. John Mayer has been out there.
What about, how about this one? How about this one? If you want to talk modern guitarist, how about Her?
Her isn't bad. Their bass player always takes a bunch of flack for the bass face.
Yeah.
I can tell you, bass face, guitar face, and everything can tell you from experience. It's
a real thing.
Involuntary. It's involuntary. In fact, I would go one step further. If you sit and watch a band play and nobody makes guitar face or bass face, there's drum face. People don't know.
They're not
there's
trying.
Drum face. If they don't make faces, get out.
Yeah.
Get out.
Yeah, they're not trying. They're not trying. They don't want you there.
It's a contact sport, this thing we call music.
Love it.
Yeah, the great conversation with Phil Conradt from Tredas LLC. Okay, if hope, Chip, as we've established, is not a strategy,
his hope and prayer.
How about patience and prayer?
Patience and prayer.
That was a potential strategy thrown in towards the end there.
Right. It depends on what has gotten you to the point of patience and prayer.
Okay.
Now, what I'm saying here is making a bad decision at the lows or the potential lows doesn't make a bad decision at the highs any better. It only makes it worse. So two wrongs don't make a right in this case. Two wrongs just make it worse.
Yeah.
So maybe it is time to give the market an opportunity to learn more about the supply side, to maybe make some adjustments. Now, if the market had responded to the planting delays and to some of the issues that we've got in Minnesota, I mean, one of the guys that has been coming on Crop Tour for a long time sent me text last night talking about the condition of the crop in southern Minnesota, and it's tough. This guy doesn't complain about crop conditions. He doesn't. And if he's sending me text saying, man, you can't believe what's going on up here with all the yellow corn and all of the too much water issues that they are dealing with in southern Minnesota, it's the real deal. It's the real deal if he's talking about it. And so we've got to account for that yet. And so if the market had made an attempt to account for these issues that currently are in the rearview mirror, then I would be less inclined to say, no, let's not sell the lows here. Let's give the market a chance to recover. Right. But that's where I'm at. I'm in that camp of, if you've waited this long on old crop, continue to wait. Yeah. If you feel undersold on new crop, is that a feeling that you would have at $4.50? Does it change when you get to $4?
Yep, good question.
I don't think I feel undersold at $4.08.
Yeah.
In this market right now, it's a hard concept to verbalize.
And here's the thing.
Yeah.
Something that we should probably verbalize here as well, sort of along these lines. Brian Splitt, agmarket.net, mentioned it. Bill Conradt mentioned it. None of us is pulling for the market to go one way or the other. Our job, our analysis, our responsibility to you, the beloved listener, is to give you the straight truth. And if the straight truth is, doggone it, there's a case to be made for going lower, well, then we have to tell you that.
Right.
That's why we're here. That's what we do. We would love to be able to tell you that it's going to go higher forever parabolically and we're all going to get filthy rich. That may happen yet. I'm not giving up on that, Chip. But let's not shoot the piano player.
I've seen markets go straight up before, and I'm not sure how it made you and me rich.
Yeah, no. I'm still waiting on that money.
But here we are, still talking about it.
Yep, indeed.
National Weather Service 6 to 10 day outlook for July 15th through the 19th. Second half of July already. Above normal temperatures expected over the entire Corn Belt, most of the country. On the precipitation side, we've got near normal precipitation running north to south right through Minnesota, Iowa, eastern Nebraska, Kansas, Oklahoma, all the way over to Indiana, western Kentucky and Tennessee. And then in the 8 to 14 day, the above normal temperatures stick around for most of the country, and near normal precipitation expected over the bulk of the Midwest. So there we go. Thank you so much for listening today. Tomorrow morning, we're going to have a conversation with Senator Joni Ernst. And then it's time for a Farmer Forum right here on AgriTalk.